Hi, this is Reid. I'm the president of Real Assets at Westwood. I'm looking forward to giving you an update for March 2024 of the energy infrastructure business. As you can see here on page 2, we had a very strong month, up 6.5% in the Alerian Midstream Energy Index and about 6.9% for the American Energy Select Index. That was principally driven by a strong commodity price move of 6.3% in oil prices. But you can see natural gas prices didn't cooperate. They were down about 5.2%. Overall, the broad energy complex did very well. The XLE upstream index was up 10.5%, and XLP, the producer index, was up about 10.9. So March certainly was a very strong month across the board. Moving over to the year-to-date column on the far right, it was an excellent first quarter, up 10.2% for the AM&A index and about 12% for the AMEI index. The MLP index was also up about 14%. So one of the strongest quarters we've seen in recent years. We saw similar returns in the XLE index, up about 13.5%. And the only notable bad news was really on the renewable side. Solar ETF was down 15%, and the clean energy ETF was down about 10%. So traditional energy strategies are working very well with higher commodity prices. You can see crude oil was up about 16% in the first quarter, while natural gas prices were down about 30%. Looking at the breakdown between C Corps and MLPs, for the month of March, the average C Corp had a very large rally, up 8.8%. The MLP index, or average, lagged behind about 2.8, but was up more going into the March. And then the Canadian average is up 4.3%. Looking at some of the highlights, E-Train, a stock we'll talk about in a few minutes, was up 17% as they were actually acquired in March by EQT, an oil or a natural gas producer. Targa was up about 14%, and Kinetic was up 13% for the month of March. The worst laggard year to date is Cheniere Energy, ticker LNG. They're mainly suffering from lower natural gas and LNG prices, but still showed up, pretty notable, up about 4% for March. On the MLP average, MPLX was the largest performer, up 8.1%, and Energy Transfer was up 7.4%, with the major laggard being Delek Logistics, down 6.2%. In the Canadian group, Key was up 6%, and Enbridge, a large cap, was up 5.2%, with Pembina up about 2.7%. So all 6 stocks in the Canadian index showed notable gains for March. When we look at year to date, it's a very solid showing, with the categories up 14 to 19%. On the C Corp average, the top performer year to date is Targa, up 30% year to date. And E-Train, which I mentioned earlier, is up 24.5% on the back of the acquisition. The only stock that's down in the C Corp area is Cheniere, down about 5.3% due to weakness in natural gas and LNG export prices. On the MLP side, NuStar is the top performer, up 27%. They were acquired back in January, as you may remember listening to our calls, by Sun, an energy transfer company. And Western Gas was up 24% year to date. On the weak side, GEL and DKL were both down about 2.8%. So nothing material relative to the large gains on the MLP average. And then the Canadian average, Gibson was up 16.6%, while 2 of the larger cap names, Enbridge and TRP, were up only 4% and 7%. So pretty common theme. The large caps are lagging a little bit in the Canadian market, whereas the small and mid cap names are outperforming. Now, in terms of wrapping up, the last slide we want to talk about is consolidation. You may recall in January, Sunoco announced a deal to acquire NuStar and MLP in an all-stock transaction for $7.3 billion. And then in March, EQT, which is a natural gas producer in the Marcellus Basin, agreed to acquire E-Train in an all-stock transaction worth about $5.5 billion, or about $12.50 per share. What's really interesting about this EQT buyout is that they actually spun off E-Train back in 2018, and they're essentially reuniting the business and forging an integrated natural gas company that has both production and midstream assets. And so we thought it'd be helpful to kind of show some of the other small and mid-cap names that have EBITDA below $1.5 billion that could be potential takeover targets. We've seen both NuStar and E-Train, which happen to be the first and third largest company on the list. But as you can see, there are still some further opportunities for consolidation, notably across the food chain here. And what we're seeing is, by and large here, stock for stock deals that make a lot of sense in today's market to wring out synergy and to flow more EBITDA to the bottom line. So we would not be surprised at all to see continued consolidation among these names here on this list. So thanks for joining, and I hope you enjoyed the March update. Thank you.